Hello and welcome back, guys, in this third part. So, what we've been given in the second question is that of rows, the directors of rows are not fully aware of the requirements of IAS 21, the effects of changes in foreign exchange rate in relation to exchange rate differences. Okay, so they would like advice on how the exchange differences should be recorded on both monetary and non-monetary assets in the financial statements, and how these differ from the requirements for the translation of overseas entity. Right. So in individual financial statement, SOPL, in consolidated OCI, right? So we need to advise them. The directors also wish on what would happen to the exchange differences if Rose sold all of its equity shares in STEM, right? Okay. So what would happen to exchange differences? Provide a brief memo for the directors of Rose which would identify the correct accounting treatment. So 8 marks, 1 marks per point. Right, so let's explain by telling them. So the things that we need to explain is basically monetary assets, non-monetary assets, overseas entity, right? Monetary assets, non-monetary assets, and foreign subsidiary. Subsidiary, right? So let's explain with monetary assets. So what are monetary assets? Monetary assets are units of currency held and assets and liabilities to be received or paid in a fixed or determinable units of currency, determinable number of units of currency. Okay, so determinable number units of currency, right? So either it's fixed or it can be determined. Okay, how many units that we need to provide them. Examples would be loans. Let's start with assets, right? Since we've written assets first of all, so receivables, foreign bank account, loans, and payables, right? Payables, and then monetary assets or items are retranslated using closing exchange rate at the year end. As per IAS 21, effects of changes in foreign exchange rate, effects of changes in foreign exchange rate. So as per IAS 21, effects of foreign exchange rate. exchange difference on retranslation of monetary assets must be recorded in SO, in profit or loss, statement of profit or loss, statement of profit or loss, but does not specify under which heading it should be classified, right? Okay, once that's also done, so in non-monetary items, so non-monetary items are non-monetary items. Let's write items, okay, not only assets, because it could be both, right? So items, right? Non-monetary items which are measured in terms of historical value or historical cost in a foreign money, items which are measured in terms of historical cost in a foreign currency are translated using the exchange rate at the date of acquisition, date of transaction, let's say transaction uh, or at the date of revaluation, or no, we must say other thing. And so if the non-monetary assets are valued using fair value method, then it is translated using exchange rate on the date of remeasurement. Okay. Exchange differences on such items are recorded consistently with the value of with the recognition of fair value with the recognition of the movement in fair value. Okay, movement in fair values, right? So it basically means that whatever the exchange difference is, that amount will be that by that amount that particular asset will increase. Okay, so for example, let's give some example as well. Exchange difference differences on an investment property or any PPE as well. Okay, so on property on PPE, fair value through other comprehensive income. Investment property, or what could you say, fair value through other component of equity. I mean, like other comprehensive income related financial assets or impairment will be recorded in OCI, right? Change differences on the upward revaluation investment property will be recorded in other comprehensive income, right? Not other comprehensive income, profit or loss. And then in case of foreign subsidiary, so when translating foreign subsidiary, the exchange difference on net assets, including goodwill, is recorded in other comprehensive income and are held within equity. under items which can be reclassified. The proportion of the exchange gain or loss are shown as translation reserve in the parent's statement separately, and the NCI's proportion is subsumed in the non-controlling interest. Figure in the consolidated financial position. Right. Okay, once that's done, what else do we need to talk about? The directors also wish advice on what would happen to exchange difference. Exchange difference if Rose sold all that, right? All shares in equity shares in STEM. Exchange difference in case of full disposal, right? They need advice in this as well. So what would happen in this case is that if the Rose were to sell all of its equity shares in STEM, the cumulative exchange differences belonging to the equity holders of Rose will be reclassified from equity to profit or loss. In addition, the cumulative exchange differences attributable to non-controlling interest should be derecognized but would not be reclassified to profit or loss. would not be reclassified to profit or loss. Okay, so that's very important point, don't miss out. So I think that's pretty much it. Any other things the question has asked? Nope, that's pretty much it, right? So that's it pretty much, guys, in case of rows. So after this we will move on to section A questions, which will be about reporting and ethical implications from question number 15. So that will be mostly theories. Okay, so that will also be interesting thing to be looking at. So just like this. So I'll see you in the next question. Bye bye.